Welcome to the inaugural edition of the Bull Moose Ledger podcast. Andy Warhol, I think, once said everybody's going to be famous for 15 minutes, and I think what he really meant is everybody will at some point have a podcast where they talk about some niche aspect of things. We're going to talk about accounting and tax, specifically as it relates to most of our clients, which are healthcare and dental businesses. I'm joined by my partner, Andrew Witt, Ryan Walsh, CPA, and our producer engineer, Thomas Stilp. And in this episode, we're really going to talk about justifying our existence as CPAs. What does a CPA do? What should we be doing for your practice? How do we add value? Is it just a matter of time before Claude replaces us and you can do this all your own and Ryan and I go out and open up a food truck somewhere? We'll go into that and our role and what we should be doing. And I think, Ryan, if you want to start out, just some of the technical stuff that we do as CPAs. I mean, maybe talk a little bit about what we, the certification. How do we become a CPA even?
Yeah, thanks, Mike. Well, I can talk about how I became a CPA. It's different it varies in states, but in Wisconsin, at least, there was a 150 credit requirement in order to sit for the CPA exam. So I got that through an undergrad in accounting and finance, plus a graduate degree in taxation. And then at that point, once you have 150 credits, you're able to then sit for the CPA exam, which generally takes about 6 months to a year to complete. There's 5 parts in total, I believe, unless that's changed since I took it. And you take one section at a time, and you have to get a 75 or better on each of the portions of the test.
Yeah, and I think it's also important to note that every year we have to get 40 credits of additional continuing education, be it in practice management, tax law changes, that has to be certified with the state of Wisconsin. And it's a relatively rigorous degree. I know some states are talking about easing their burden a little bit to become a CPA because there's a shortage right now in our profession. But talk a little bit about, what are the things that a CPA is expected to provide their clients? I mean, we got, taxes, things like that. What are we going to be doing, or what do you think of a CPA as providing a client?
Yeah. Well, one of the things I find interesting is that, many clients think of their CPA primarily as the person who prepares their tax return every year. Taxes are certainly a big part of what we do, but there is a tremendous amount of technical work happening throughout the year that many business owners don't even realize that we do. For example, let's start with taxes. The tax return itself is often the final product. But what goes into that return has become increasingly complex over the years. Business owners today face federal tax rules, state tax rules, local tax requirements, pass-through entity taxes, changing depreciation rules, tax credits, and a growing number of reporting requirements. For example, a business operating in multiple states may have filing obligations in several jurisdictions, entity selection decisions. Even something as simple as purchasing equipment may create planning opportunities that affect taxes for years. So as a CPA, our role is not only just preparing the tax return, but it's helping our clients navigate those complexities and staying compliant and making informed decisions throughout the year that will ultimately impact their tax liability at the end of the year. And I like to say that the best tax planning usually happens before a transaction occurs, not after. So it's important to, have a CPA that you trust throughout the year to be able to talk to whenever one of these questions comes up. In terms of financial statements, there's another major area, which is the financial statements that we prepare. Most business owners focus on their bank account balance, but that only tells part of the story throughout the year. Financial statements can help answer a lot of the important questions that clients have, like, is their business actually profitable? Are their margins improving or declining? Is cash flow keeping pace with growth? And are their expenses increasing faster than their revenue? As CPAs, we often help prepare, review, and analyze these financial statements so that clients can understand the financial health of their business. Those statements are also frequently needed by outside parties, and banks may require them for financing.
Andrew, I mean, talk a little bit about, over the past couple of years since the TICJA law came out in 2018 and the one big beautiful bill, really how the CPA's role has evolved, more as Ryan was touching on planning and everything. How important do you think it is, to meet with your CPA, sort of the frequency that you'd want to meet with your CPA, to take a look at where you're heading for taxes and what, if anything, needs to be done on your taxes, maybe proactively, to help minimize that burden? Or meeting with clients 4 or 5 times a year, 2 or 3 times a year, how does that look for a client, or what can they expect there?
Yeah, I mean, like as Ryan pointed out, financial statements are very important to the business. Obviously, you have the tax return in April, which everyone focuses on, but how do you get to that tax return and the tax refund or tax amount due? Well, it's your financial statements. So you're doing what we call bookkeeping, and you're doing that on a monthly basis. And the process of that is essentially going through the checking account statements, going through the credit card statements, making sure payroll lines up, and you're reconciling those accounts and producing a profit and loss statement, a balance sheet, and sometimes even a cash flow statement. And what these statements give you are your income or your losses or expenses that you can look forward to tax planning. And I think you probably want to get 3 or 4 tax planning meetings a year. It all depends on the year for each client. And I think with those statements, you're able to determine, well, do you have to make estimated taxes each quarter? What are they? Should you increase your wage if you're an S corporation owner, etc.? And I think the options with bookkeeping, personally, it's one of my favorite jobs to do as a CPA. You can either do it yourself as a client, or you can have your accounting firm do it. And if you do it yourself, your options are likely Xero or QuickBooks Online. If we do it as an accounting firm, we're going to use either Accountants World or QuickBooks Online as well. And it just determines how interactive the client wants to be. If you want to be interactive and you want to have a lot of login access to your financials, we'll use QuickBooks Online. Accountants World is more so for accountants. It's not as user-friendly as QuickBooks Online would be. And along with the bookkeeping process, it's very important to be timely with the statements. If you have a note payable out to a loan for your practice purchase or any line of credit, your bank is going to come knocking, possibly quarterly, maybe twice a year or annually, and they're going to want to see an updated financial statement. If we don't have your statements prepared, or if we don't have your checking account statements or your credit card statements ready for bookkeeping, there could be a delay on that. And the last thing you want is to delay sending those statements to your bank. And the way we go about kind of retrieving the statements to produce the financials are either clients will give us third-party access, read-only, to their statements or their bank accounts online that we can go in each month and save them, or the client uploads the statements to our secure portal. That way we can go in on a timely basis, get the financials prepped, sent over to you, make sure we have the key performance indicators each month for you to review. And then it also helps you answer questions such as, hey, I need to hire another hygienist or another front office person. What is this going to look like moving forward? So things like that, it helps with it's a lifeline of a business per se.
I mean, how important would you guys say having a financial statement designed to reflect the nature of the business? So for example, we do a lot of dental practices. Having something where a client can readily see what are their major cost drivers, what is their overhead? Or is it just okay to put together a financial statement that has, here's one line of income and then various expenses, grouping things, things like that? Should your CPA be doing that, putting together a financial that's logical to the business?
Yeah, I mean, I would say sending over your financials along with a report that shows what your dental supplies are at, what your staff wages are necessary for a business owner. That way, if you're trending in the right direction or if your expenses are getting too high. I mean, I think as a business owner, you always need to have an idea of how your business is performing, and sometimes it's hard to see that just based on a simple profit and loss statement that's being sent over to you.
And I think, you brought up a really good point in terms of timeliness, that clients will call and ask us questions all the time regarding, I'm thinking of maybe purchasing a new piece of equipment. I might be thinking of expanding my office. How important, that timeliness of financial statements, just to know where somebody's at, Ryan, in terms of being able to offer good tax advice. That's the foundation, isn't it?
Yeah, definitely. When it comes to buying a piece of equipment, as the year is coming to an end, it's helpful to have an accurate financial statement to understand what the profitability of the business is at, whether it makes sense to take bonus depreciation on it, or even possibly if it's not necessarily needed, potentially moving it to the next year. If the financial statements are looking poor for a certain reason this year, you could potentially move it to January rather than buying it in November, December, or the opposite. If you're having a really strong year, you might accelerate buying that piece of equipment rather than doing it next year. You take it this year. And the other thing is if you're looking to buy something major and you need financing, oftentimes you're going to need an accurate financial statement in order to acquire the financing on that purchase.
And Andrew, you mentioned a little something about benchmarking and things like that. When you're working with a CPA, how important would you say, that ability to benchmark against other clients in similar businesses, how important is that for a practice owner to understand where they're at with their numbers on that, and maybe even having some context with where those numbers are at?
I think it's very important. I think a lot of our clients they know that we specialize in dentistry, and they always ask, where do you see the industry? How are your other clients, etc. And we'll be able to say, well, staff costs are up this year due to this, so let's increase the percentage that you can spend on staff costs this year. But that doesn't mean necessarily next year it'll be the same. Dental supplies are higher for whatever reason, etc. So I think looking at those numbers, it also helps clients, even if the number is a little bit high, we're able to tell them we're seeing this more frequently than we have in the past. So it's not a reason to panic, and it kind of gives them peace of mind knowing that they're not the only client where this number may be a struggle for them. And then moving forward, since they know the number is higher, it's also something that they can work on moving forward. So I think it helps.
I do think, since COVID, a lot has changed in terms of where benchmarks have been, and having some context that maybe you're not the only one in the boat, or having even a peace of mind of, we've seen like staff costs go from, an average of 24-25% in a client up to nearly 30% of saying, okay, maybe that's the reality here. Do we want to consider getting out of insurance? Do we want to consider maybe some cuts other places? Just maybe having a peace of mind and knowing, well, this is our market right now, would be beneficial for owners. I think one tangible example that we've seen just tracking stuff is merchant processing on all of our clients. That it's an expense that's gone from 0.5% to nearly 2% of revenue. But being able to proactively look at financials and go, well, look, if you charge that back to your clients, here's how much money it would save you. And just having those kind of conversations with financials if we're timely, if we're seeing where the trends are, I've always found to be really helpful.
Yeah, and I mean, if it kind of goes back to timeliness, if you're not timely, you're not even able to look at these options. So really, no timeliness, no financials. There's really not good tax planning. So come April, you're likely going to be in for a surprise.
And I mean, we'll get into like tax planning and things like that in future episodes and some of the tricks of the trade, but really without that foundation of, yes, we're going to competently get a tax return done and everything like that, but a CPA's real value is to be able to look at that whole picture and give you the best possible advice based on where you're at for your taxes. And it's not necessarily always the answer that you want to hear.
Right.
I mean, for me, one of the big roles of a CPA, or why you want a CPA involved in your business, is I've always thought as a CPA should be, if you want to call it a valued business advisor, the voice of reason. Maybe, accountants aren't known for our outgoing personality. Being that person who's going to make some decisions without emotion. And I can think of a few instances, you guys all know when clients go to a tax seminar or something, they hear, okay, I can put my kid on the payroll for $16,100, and CPAs may get the we always say no to stuff, but kind of describe what that conversation looks like with a client, Ryan. A client goes to a tax meeting, what kind of value is a CPA going to bring to that conversation when somebody goes, well, I just had a newborn baby, I'm going to put him on the payroll for $16,100.
Yeah, we certainly hear that stuff. I think when it comes to things like that, I think it's important to make the story accurate, right? So is it a believable story, right? Like, as you mentioned, an infant on the payroll doesn't make a whole lot of sense. It can kind of be quote unquote caught a lot easier. But now if that kid is 10 to 12, 10 to 17, or maybe even 8 years old, I mean, the story is much more believable, right? And so we look at everything on a case-by-case basis, and we just make sure that if we are going to go that route, that we check the boxes and make sure that it can be verified.
Yeah, and I think, one of the other things too, our clients go to a lot of study clubs and stuff like that, and when you're talking to other business owners, it's kind of hard to filter out some of somebody just beating their chest about how good everything is in their practice versus where you're at. So sometimes I think our role as a CPA is just to tell people, really, here's the truth within your numbers, and here's the truth of what we're seeing within the industry overall. One of the concepts we have at Bull Moose is, we should be neutral in our advice, and I think what I mean by that is there are CPA firms out there that will take a kickback for referrals, be it to a bank, be it to a financial advisor, or they'll create partnerships there. Why do we think it's going to be in a client's benefit for us to be neutral, Andrew?
Well, you're not giving them advice based on essentially a payout. You're doing it because you're acting as a fiduciary for them, and they don't have to think, or in their mind, they don't have to think that you're giving this advice because you're getting a fee from someone else. If you're connected to a financial institution and you're telling them to max out a retirement or do a huge profit sharing, if you're not receiving any monetary fee from that person, then that advice given to them is just based on the numbers that you see instead of an outside third party. I think it gives peace of mind to them knowing that you don't have an interest in them making that max out contribution other than what's in the best interest for them and not yourself.
Yeah, and I agree 100% with that. I think that's the reason we never got into that lane. I don't want somebody going, well, you recommended Bank X because you were getting 0.25% of the loan fee, or you were telling me I needed to pound a defined benefit plan because you were getting a kickback from a financial advisor. I think a CPA's advice should always be, it's definitely helpful for us to have the meetings with the clients so we know who they are and what their goals are and what their end game is, so we can give them the best possible advice. But I think also without emotion too, because when you talk about that, I mean, any client is going to be nervous if they're going to maybe put up a new building. They're taking out a ton of debt, and being able to dispassionately look at some of those things and go, well, based on your numbers, this should work, and here's why. And maybe giving that client confidence to take that next step in their evolution as a business owner. I mean, to which point I would say the fact that we are a smaller firm and we have to do all the stuff that our clients have to do in terms of hiring and firing employees, in terms of, do we do something like a podcast or spend money on advertising, or what are we going to use for this, or how are we going to deliver our product? I think we do always have a sense of empathy, or your CPA should have a sense of empathy for what you're going through as a business owner, that it's not necessarily our way or the highway, but we've done a lot of this stuff, so I think we're better positioned to advise people.
Right.
One of the things that's out there within the industry, and we've had clients ask about it, there are a couple of credentialing places out there to be a quote unquote dental CPA, and is that a real thing? And having experience in this matter, there is a group out there called the Academy of Dental CPAs. I think what people need to understand there is that was created by a large firm, and basically what they did is they credentialed their particular CPAs as a quote unquote dental CPA. There's no test to be one. It's run by geography. So in my opinion, you don't have to necessarily look for somebody who is credentialed per se in this area. But what do you guys think? I mean, the advantage of working with somebody who works day to day within your industry and sees other clients like yours, there has to be an advantage there, correct?
Yeah, I think there's an advantage to, working with someone who works with, one type of client specifically. Like we've touched base, on in the, in previous parts of this episode. But I don't think it necessarily is important to quote unquote have the credential. I think it comes back to, just having a neutral CPA that focuses on that industry and knows that industry well and has good metrics to judge financial statements based on.
I think on the day-to-day, I mean, you can get away with essentially any CPA or even an enrolled agent. I mean, it's a new credential the IRS has. It's basically a tax practitioner that doesn't have, because when you think about it, a CPA was originally designed, we were supposed to do audited financial statements. That was generally the role of a certified public accountant, that if you were a publicly traded company, we would do an audit and, essentially give it a blessing. So you can probably use anybody in the theoretical day-to-day, but to me, it's always been when you get to decision points in a practice, whether it's to expand a practice, whether it's to take on a new bank loan, whether it is to bring in an associate, whether it's your exit at some point in it. To me, that's where somebody who's specialized within dental is going to add a lot of value. And I've just never seen, there is this concept out there that we cost a lot more, and that really hasn't been true, but I do think we add value when it comes to those big decision points in a practice. Andrew, if somebody did want to do accounting on their own, and do their own bookkeeping and some of that stuff, what software should they be looking at? What, things should they be looking at in payroll and things like that?
I mean, if a client wanted to do it on their own, you'd likely be looking at Xero or QuickBooks Online. And likely the best case scenario, you do it on your own and your accountant has access to it as well. Because your accountant's going to want to go in on a quarterly basis to preview the financials and make sure everything is where it's supposed to be. They're going to have to make depreciation entries, amortization entries, which is important for tax planning. But bookkeeping and payroll can basically be done through QuickBooks Online. That's what we commonly see. And frankly, if the client is good at it and they have the time to do it and they enjoy it, then they should do it themselves. They'll save some money in accounting fees. But if they're doing it themselves and constantly their accountant has to make adjustments, or they're putting things in wrong places, or they're spending way too much time on it, then it may not be for them. And if you're spending hours on bookkeeping or payroll when you could be doing dental work, you kind of have to see the value in which, like 2 hours bookkeeping versus 2 hours seeing a patient. What value is more higher for you? So yeah, you can do it.
I've always
You
looked
can do
at
it
it as
themselves.
our clients can produce, it depends on the client a little bit, but $1,200 an hour, are you better off spending the time within your books? I think some people will say that they are because they understand their expense structure a little bit better because they're doing it that way. But I've always found, if you set up good internal controls within your office and you're signing off on invoices and you're reviewing your financials, at least on a quarterly basis, you have some of those internal controls. So I think it is at the highest and best use of your time to go in and, bang out bookkeeping. Do you think, how much easier, you hear all the stuff about AI and stuff like that, that's certainly coming for our jobs at some point. But looking at the integrations with QuickBooks, has that made QuickBooks any easier for a client to use, really? In terms of accounting rules and stuff like that?
In some ways it can be easier if it's correct, but I also think it makes it way more complicated to do the bookkeeping, and AI from experience is not always correct either. So even if you plug something into AI, you have to be able to review it and know that what's right and what's wrong. But I think for simple data entry steps like bookkeeping, it can make it easier, but I think it also makes it more complicated for you.
Yeah, I do think the feeds have value, but at the end of the day, you still need to know where everything goes within that financial statement. So it's probably saved us some keystrokes, but I'll date myself a little bit. When we first started, QuickBooks wasn't even invented at that point.
Yeah, and the issue with
It's been a
bookkeeping,
tool.
the issue with bookkeeping and AI is if the AI does it for you and the first entry is incorrect and you don't catch it, it's going to repeat that step over and over and over again because you marked it as correct when in reality it was incorrect. So you're going to have to go back and fix multiple errors then. But I do think it's advertised as simple and easy, and you don't need an accountant because now you can use AI, and I don't think that's the case, at least at this point.
I think Intuit does is run those commercials like everybody's a tax preparer now, and what we've even seen as professionals who deal with this day to day, I don't know, the last 7 years we've seen so much disruption within the tax space with rule changes and everything like that. There's even mistakes that we've made over the 7 years, and we're in this all the time. We're not infallible. So you just look at, you only know what you don't know. And again, I think you look at highest and best use of time. Anybody can clean their office or do the landscaping at their office. And I notice there's always a bill on all of our clients for stuff like that. And you look at financial matters that are really important that maybe an area you want to spend a little bit of money on. Overall too, I think most clients are going to spend somewhere around 1 to 1.5% of their revenue on professional fees, which includes payroll, us, attorneys if they need them for a year. It's not a massive expenditure year over year. So
No, and it's well worth it.
So I think, the purpose today was, we wanted to justify our role and talk, in conclusion, what a CPA should be doing for you. I mean, to us, the biggest thing is timely financial statements. Timely financial statements yields proactive tax advice. Getting the technical stuff on the tax returns done for everybody. And this will be part of a series. In our next episode, we're going to talk a little bit about buying a practice and what you should be looking at. That's going to be your first step as a practice owner. You're either going to start up a practice or you are going to buy one. So in our next episode, we'll talk a little bit about that. Until next time, leave us a review. I guess that helps with the algorithm or whatever. Special thanks to our producer engineer, Thomas Stilp, for making sure our microphones were on and this is audible, and he'll probably edit some of this stuff to make us sound even smarter. And until next time, this is the Bull Moose Podcast.